Right, hello then everyone, as we are at the beginning of another week of trading on Monday, the 4th of December. We are into the last month of 2023. How time flies, but we'll look across markets, we'll see what's going on, as last week was just pretty much a continuation of trends that we have seen in recent weeks. The US dollar downside continues. You can see the trend is pretty clear across your Aussie, Kiwi and Sterling, dollar Swiss, dollar CAD, dollar yen, US dollar weakness across all of them. The trend is pretty clear. The trend is similar on euro dollar, but euro dollar has a bit more of a pullback than the rest of them. Due to the fact we had some weak economic data from the Eurozone over the course of last week, paid 20 thoughts of the ECB hiking interest rates again. And as I've said before, especially when talking about stocks, I always felt, certainly over the last few weeks and even months, that the European stocks may be slightly an attractive proposition due to the fact that interest rates are lower in Europe than they are the majority of the rest of the G8 or the other countries that do have higher interest rates. Obviously Switzerland and Japan get excluded from this conversation. Plus, they are probably quicker to, or closer, should I say, to an interest rate cut than the other nations that I've spoken about. So, euro bit of downside. Christine Lagarde pretty sort of negative over the course of last week. Few comments from some ECB officials, slightly negative last week. Economic data does not suggest even a hawkish rhetoric going forward. So, a bit of negativity in the back end of last week from euro, but everything else, the trends are all still intact. Technically speaking, the trend is still intact in euro dollar as well. We'll come across the equity markets and they continue their move higher, certainly across the S&P, the Nasdaq, the Russell, the DAX, the Euro stocks last week. FTSE's just been all over the place for a while, so I'm not going to pay too much attention to that. The Nasdaq sideways over the course of last week, didn't give us much in either direction, but Dow Jones rallying hard over the course of last week. Well, everything else pretty much up. You can see yields, US yields, a 10-year, 2-year continue to trend lower. That again is supportive for equities, negative for the dollar. I think the interesting move certainly over the weekend is gold has hit a fresh all-time high pretty much as soon as it opened, about 10 past 11, quarter past 11 last night. This did start to rally and did reach up over 2140, which nearly 2150 it ended up reaching, which is all-time highs in the price of gold. You can see the aggressiveness of that move on a 5-minute chart. You can see if you just measure that move in the space of 20 minutes, over 3.5%, $75, which is a pretty astonishing move out of really nowhere overnight. I mean, I can't see any headlines really drive that. I mean, obviously it's in line with recent trends, in line with yields being lower, in line with the Fed potentially or probably being finished with their interest rate hikes. That's all a recipe of things that gold likes, that gold pushes higher off the back of. But in terms of that sort of a move pretty much straight away at the open last night is a pretty strange one, if I'm being perfectly honest with you. Had a bit of a run higher, and I mean, you gotta think, I think people trying to buy that, maybe the algos trying to buy that, you'd have to imagine they probably caught a little bit offside. It wouldn't surprise me if that had a bit of a pullback and prompted a bit of a pullback in the price of gold. So I'm going to steer clear of that for the time being. It's just a bit all over the place, straight up and then straight back down again. Super volatile first few hours of trading on gold over the course of this week. Economic calendar then going forward, really a pretty quiet economic calendar. Got some trade balance figures from Germany, Australia and China. Not too much to see there. The PMI out of Canada. Maybe it might influence the Canadian dollar, but GDP, again, it's a backwards looking figure from Australia, but the RBA are obviously going to have more of an input when it comes to the Australian dollar, and it wouldn't surprise me to see at least some hawkish rhetoric from the RBA tomorrow, tomorrow, whatever way you want to try and put it, 4:30 or 3:30 should I say, tomorrow morning. It wouldn't surprise me if they at least talked a good game later on this evening. I mean, consensus for no hike, and the chances of us getting a hike are, I'd say, relatively slim. But inflation's still at 5% in Australia. That's not really where they want it. It's nowhere near where they want it. They want it down towards 2%, and inflation is lower across the rest of the nations, apart from sterling, which is apart from the UK, should I say. But the UK inflation is coming down at a much stronger pace than Australian inflation is, so there's still more work to be done. You'd have to imagine they at least talk a good game. They'll probably talk about interest rate hikes at their minutes from their last meeting. They did suggest there was the potential for one or even maybe two more hikes. They are probably likely to reiterate that stance, and I would imagine the Australian dollar remains supported over the course of this week. After you get through that, then you've got some GDP figures, again backwards looking indicator, but again, if you get a beaten consensus, again, that further reaffirms a hawkish stance. Trade balance figures, the trade surplus set to widen, which is again another positive for the economy. 0.4% growth over Q3 is pretty solid growth as well. So, I'd have to imagine that the Australian dollar is supported over the course of this week. I don't think a little punt on maybe some small risk into some longs in the overnight session wouldn't be too bad of an idea. Pretty quiet in the economic calendar apart from that. Monday, some trade balance figures out of Germany so far today, not doing too much for us. Really, non-farm payrolls, the unemployment rate is where we need to keep our eyes focused on over the course of this week. Consensus 180k, not great jobs growth below 200k in non-farm payrolls. Now you are likely to get a deviation from consensus one way or the other. Unemployment rate 3.9%. Does that get above 4%? Does the unemployment rate start to rise? We're still in the point of time where bad news is good news for stocks to a certain extent. Bad news makes the chances or increases the chances of interest rate hikes being finished. There's a really pull forward cut. Markets at one point last week were pricing in a 50% chance of a cut in March, but Jerome Powell pushed back on that. US dollar didn't manage to gain much of a foothold off the back of that. So this gets 4%, 4.1%. Still not a bad thing. Just reduces the need for interest rate hikes going forward. But we'll get a point where bad news is genuinely bad news. If that unemployment rate starts to get up 4.3, 4.5, up above 4.5%, that's probably when it will start to turn a bit. But for now, slight miss of consensus, slightly above consensus, that comes in 4%. I'd imagine you're likely to see stocks rally off the back of that. But we'll cross that bridge when it comes to it on Friday. How you navigate Monday to Thursday into Friday, I'm going to have to work off trends, how they have been recently. Obviously, US dollars lower, stocks higher. I'm not going to change my bias just yet. RBA, I imagine the Australian dollar remains supported, especially if stocks trade higher. The Australian dollar seems a good long in over the first half of this week. But apart from that, non-farm payrolls, main focus of attention this week, but we'll worry about that when it gets to it. But keep an eye on your trends, keep an eye on your cross-asset correlations. Economic calendar, not likely to shake up markets too much until Friday, unless you're a trader of the Australian dollar. So keep an eye on those recent trends. Dollars lower, yields lower, stocks higher. That's the side of the fence I'm personally going to sit on, certainly in the first half of this week.